Good day. This is Peter Knepp from Castlestone Management with comments on the U.S. equity markets for a week ending 11 January. Tensions between the U.S. and Iran dominated market direction this past week, peaking with Tuesday's retaliatory attack on U.S. bases in Iran by Iraqi missiles. However, when it appeared that both sides seemed to be backing away from further escalation, equity markets resumed their 2020 advance. The Dow Jones briefly crossed 29,000 for the first time on Friday, before pulling back on a weaker than expected jobs report. On the week, the Dow Jones increased 0.7% to 28,823.77. The S&P 500 rose 0.9% to 3,265.35, and the Nasdaq Composite gained 1.8% to 9,178.86. All three indexes are within a percentage point of records. Note, Chinese Vice Premier Liu He will travel to Washington next week to sign the Phase 1 trade deal agreed upon with the U.S. Late last year. That should be a positive for equity markets. U.S. Treasury yields climbed this week as investors shifted into stocks once the tension in the Middle East seemed to diminish. The end of the week did see some safe haven buying after the jobs report. However, the 10-year Treasury note yield did end the week at 1.825%, the 2-year note at 1.57%, and 30-year bond at 2.284%. The dollar backed off its highs late in the week as the flight to safety triggered by the escalating U.S.-Iranian tensions reversed. Gold futures ended higher to score a third consecutive weekly advance. U.S.-Iranian tensions and a weak jobs report helped drive demand for gold. Oil futures reversed direction Friday as fear of a wider U.S.-Iranian confrontation faded, and previously released data showed a rise in U.S. crude inventories. WTI, the U.S. benchmark, was off 6.4% for the week, the biggest weekly percentage loss for the most active contract since July. And Brent, the global benchmark, was off 5.3% for the week, which was its biggest such decline since August. Thank you for listening. Thank you for doing business with Castlestone. We'll talk to you soon.